And it's 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Well, today we'll be talking commodities, April inflation data for Nigeria. First of all, let's get some market and business news. Oil prices inch lower today as Hungary resisted a European Union push for a ban on Russian oil imports, a move that would tighten global supply, with investors taking profits on a recent rally. Brent crude futures fell 11 cents to $114.13 a barrel, and the U.S. West Texas Intermediate crude slid about 22 cents to $113.98 a barrel. Both benchmarks gained more than 2% on Monday, following a 4% jump on Friday. EU and foreign ministers failed on Monday in their effort to pressure Budapest to lift its veto of a proposed oil embargo on Russia following the country's invasion of Ukraine, an embargo that would require approval from all EU nations. And the Minister of State for Budget and National Planning, Clem Agba, has been speaking of the commitment of the federal government towards the provision of infrastructure in the face of low revenue collections owing to the impact of the COVID-19 pandemic. The minister, who was speaking after a presentation of an award by the Director General of NATI after Nigeria ranked top in Africa and Middle East in the implementation of open government partnerships in 2021, explains that the federal government remains resilient in providing infrastructure and decent means of livelihood for the people while upholding the tenets of accountability, transparency, especially in the oil and gas sector. Do take a listen.
While other countries are still in recession and fighting, we have since left recession. We only had 2 quarters of negative GDP growth. And since then, GDP has been positive and it's going higher. So these are good things that the country is doing that it needs to be applauded for. And one other thing is that this government is now doing more in terms of infrastructural development, but with less revenue available. Unlike when we had so much of revenue, but there wasn't any infrastructure to show. Today we see projects, we can touch the projects, we can feel the projects. Like the second Niger Bridge is no longer a story. We were told about it before. For so many years, it was budgeted for. But we never saw any pile come up. We never saw any pillars. But now, that bridge is connected from Delta to Anambra. So you can see it, you can walk through it, you can feel it. And this is at a time when revenues, like I say, have depleted.
Well, now to our first conversation. It's all about inflation globally right now. And Africa's most populous country, Nigeria, soared to 16.8% in April. Talking about headline inflation, annual food inflation rose to 18.4% from 17.2% in March, sending the headline rates to 16.8%. That's the highest level we've seen in about 8 months. Let's drill down on these numbers now with Damilola Olukono, analyst at Chapel Hill Denham. Great to have you on the show, Damilola.
Yeah, thank you for having me, Ladi.
Yeah, so it's all about inflation right now. That is the major elephant in the room. All central bankers trying to bring down, inflation at this point. But we're seeing the numbers now. What are the drivers of this uptick we saw in headline inflation in April?
Yeah, thank you very much. Headline inflation has been ticking up over the last 3 months. The major driver of April's uptick in inflation, was largely driven by pressures coming from the food basket of the inflation, specifically, due to the higher diesel costs, the higher energy prices, that trickles down to higher transportation costs, which continue to mount pressure on commuting costs, from the producing state, down to the cities where these food items are produced. And secondly, due to the onset of the Ramadan, historically, we always witness pressure on food inflation, the month preceding the Ramadan, which was what played out in the month of April. And the insecurity situation as well in the north, still continues to mount pressure on food inflation. And overall, that was what drove the uptick in headline inflation, we saw in the month of April.
Right, and globally, we're seeing inflation hit new highs, in the U.S. and the UK, and most of it is energy induced. That's what most analysts have said. So I'm wondering, Damilola, let's say the oil price, crashes down. Will we see inflation tick down at some point?
Yeah, if the oil price comes down, we would see an ease in the core basket of the inflation, which is where the energy prices affect the most. But like I mentioned, inflation in Nigeria is driven by the food side of things, and that we would need to see more structural measures, put in place, to combat the inflation we are seeing on the food side. One is insecurity, the other one has to do with transportation infrastructures, and lastly, the one that has to do with energy costs, which is trying to reduce the cost of transportation. But then globally, the ongoing rift between Russia and Ukraine, has also led to higher energy prices. As you are aware that Russia is a big exporter of crude oil. So the pressure going on that front, continues to impact energy prices, and that was what has led to the spiraling global inflation, we continue to see. So yes, if energy prices, decline on a global scale, that would lead to decline, in inflation, particularly for net importers of petroleum products, like Indonesia, Germany, and the likes. But then in Nigeria, we need to see more than a decline in energy price to see an ease in headline inflation going forward.
Right, it's quite interesting. But, the hike in inflation means the purchasing power of, Nigerian consumers, some of whom live on a minimum wage of about 18,000 per month, is being eroded. And salary earners, are said to be hit the most with all of this. But what do you think can be done, at this point for some kind of soft landing?
Yeah, what can be done? To provide soft landing, for the end users or for the consumers in the street, is what I already mentioned. Part of it is what I already mentioned before. One, we need to reduce our reliance, on imported product, because what we find is some of the pressures, we saw in the inflation basket is coming from the imported inflation side of things, which would mean that when you see spiraling prices on the global front, we tend to bear the brunt, in the domestic landscape. So if we can see increased production of food items and less reliance on imported product, I think that would douse some of the concerns, we are seeing on the inflation front. And secondly, if the CBN is able to solve some of the concerns, on the FX front, we would also see ease to consumer wallet, because what you currently find is most producing companies, have increased prices, on the back of the cost inflation, we've seen to raw materials, basic raw materials, they used in producing their product. So if we see some sort of measures put in place, to combat FX problems, then that could also lead to improved consumer wallet as well.
Right, and inflation in Nigeria was already on the way up before the war in Ukraine. But how big of an impact is the ongoing face-off between Russia and Ukraine on Nigeria's inflation?
Yeah, it's in some sense we are being impacted, especially when you look at the fact that about 80% of Nigeria's FX revenue comes from oil, and like I mentioned, because Russia is a big exporter of crude oil, the shortage in supply coming on that front has left crude oil prices elevated. Nigeria is largely impacted, from that standpoint. And for other commodities as well, Russia is also a big producer of wheat. And Nigeria is also somewhat a big consumer of wheat-related products. The likes of flour mills, Olam, Dufil, have all raised prices, on the back of the pressures coming from Russia's inability to supply adequate wheat, to the global market. So Nigeria has been largely affected by the ongoing rift, between Russia and Ukraine. And if this crisis, continues over a long period of time, we will see further pressures, emanating from that front.
Yeah, and a lot of warning about global hunger at this point. But, MPC meeting is coming. How will the inflation reading affect the outcome of the MPC meeting holding next week? Are we going to see changes to the MPC parameters?
Yeah, for us, we think the Monetary Policy Committee, is faced with a very difficult situation, like I like to call it. Because on the one hand, we are beginning to see monetary tightening, on the global front. Already, the US Fed already raised interest rates, multiple times this year. And they have also guided to raising interest rates, further as we go into the year. Same thing with the Eurozone as well. The ECB has also guided to raising interest rates. So in developed markets, we are beginning to see elevated interest rates. And in some sense, that has also led to capital flight, in emerging markets, of which Nigeria appears to be a player in that space. So on the one hand, the monetary policy is faced with that problem. And on the other hand, again, locally, we are also seeing inflationary worries as well. For the third consecutive month, we saw uptick in headline inflation. And in fact, inflation even rose to an 8-month high. So when you also look at things from that perspective as well, I think that will be an important consideration, in formulating their policies, ahead of the next MPC meeting as well. One of their major excuses, for not keeping interest rate elevated, has been economic growth. And for some time, we've seen stability on that front. Nigeria's economic growth, has improved from the COVID pandemic lows, we saw in 2020. So for us, we think the stage seems set for an elevation in the MPR rate, albeit we guide that we might not see that come to play at next week's MPC meeting. And at the next MPC meeting in July, we think if the economic parameters, remains the same, it will be a good time, for the MPC to leave to raise their MPR rate. We are guiding to a 25 basis point to a 50 basis point hike, by then.
Right, and we've seen the U.S. Fed, raise rates about a couple of times, about 50 basis points. And, looking at Nigeria's situation, do you think the MPC have, something in their arsenal that can actually realistically fight inflation at this point?
Bulk of Nigeria's inflation, is largely structural compared to what you have in the domestic market. Where their inflation, is demand pull. For us here, inflation is cost push. And to combat that type of inflation, you would need to put structural measures in place, as against using the traditional way of combating, using the traditional way of using monetary policy to combat inflation. So alongside maybe an hike in NPR rate, for us, we would like to see structural changes, in the FX front. Like I mentioned, compared to the highs, we used to have before, FX liquidity appears frail, and that continues to mount pressure on the naira. So if we can see the CBN, come up with policies, to improve FX liquidity and to make FX, available to investors who are willing to come in and out of the country, then we think those kind of measures, would be a more viable way, to combat inflation. And secondly, as well, infrastructure is also a major determinant as well. Commuting costs, are highly susceptible to various shocks. And if we can get our infrastructure right as well, we think it will go a long way, it will go a long way in ensuring that our inflation is subdued, and it would make inflation, more manageable than it is today. So, in summary, as against using monetary policy tools like increasing the NPR rate, we will need to see more policy directives, that would create or lead to lasting changes, in the economy.
Right. Not an easy time for central bankers all over the world, I must say, Damilola. But, what's the impact on fixed income yields, going forward, and how will this affect the outcome of, the subsequent primary market auction?
Okay. The impact for fixed income yields, it's a bit direct. For us, coming into 2022, we are guided to an elevated fixed income yield. That's largely coming from the lower maturity profile, as against what we had in the prior years. And when you now overlay that with the fact that inflation rates, are on the uptick, that just provides leeway, for further spike, in fixed income yields. And that's what we've seen, come to fruition. The last few bond auctions, has delivered higher stop rates. And we think this will be the case, going forward, especially when you factor in the fact, like I mentioned before, factor in the fact that the liquidity in the system, is somewhat lower, compared to where it used to be before. So we think the stage seems set for an elevated fixed income yield, and we think investors or market participants, should position, ahead of further spikes in fixed income yields.
Quite interesting. But what is the outlook for inflation going forward? And when do we see, inflation peaking or moderating?
Okay. For us, we think going forward, we might still see further spike in inflation, particularly on the food side of things. The drivers of the elevated inflation numbers, we saw in April are still pretty much around. The insecurity situation in the north, is still persisting. And we are still seeing the pass-through of higher energy prices, on transportation costs. So for us, we think the outlook for headline inflation, is for it to go up further. And in terms of when we think it will peak, we think there is still scope for elevated energy costs, which would still mount further pressure on inflation. So for us, when we start seeing crude oil prices, moderate to decent levels, maybe below $80 per barrel, then we think it will be a good time, or we think that would provide, leeway for further downtrend in inflation.
Right.
But from where we see it, we think there is still room for further spike in inflation.
Right. Everyone's looking for that peaking point for inflation. Thanks so much, Damilola Lukman, analyst at Chapel Hill Dynamos. Great having you on the program.
Thank you for having me.
All right, so after the break, commodities market update is next as wheat prices hit new highs. That's in a moment. Do stay with us. All right, now to our next conversation. Well, India's banned exports of wheat effective immediately, citing a risk to food security, partly due to the war in Ukraine and as a scorching heat wave curtailed output and domestic prices, and we've seen prices hit a record high with all of that. We have Dumebi Oluwole, analyst at Financial Derivatives Company, joining us right now. Great to have you on the show, Dumebi.
Thank you very much for having me.
Yeah, so most analysts, they talked about the commodity super cycle. I remember in 2021.
Yes.
I'm sure they didn't see this coming.
No, I mean, no one literally saw a war coming. So, and all of the, increase in prices that we're seeing across the global commodities market is literally stemming from the Russia and Ukraine war. And that's because Russia and Ukraine are really significant to, or are really important to the global commodities market, from energy to grains, even to metals. They are extremely important. And so with what is happening in the warring countries, we're seeing the ripple effect in the global commodities market, and then there's a trickle-down effect to countries that import. So now coming to India, this is somewhat like the same issue that happened with Indonesia, because like a few weeks back, Indonesia also banned its palm oil exports to the global commodities market. Just because domestic prices are higher. It might seem quite ironic because let's look at India now. India is the second largest producer of wheat in the world after China. And imagine a situation where the country is now saying, oh, wheat prices are really high in our country, we can't export anymore.
When you should be making money.
When you should be making money from higher prices. But you can't really blame them because we're seeing that several countries are beginning to take some form of food protectionist approach, and by that I mean a situation where you decide to just not block out imports, or block out exports rather, just so you can satisfy your local demand before now selling to the external world, so to say. It's somewhat like what China did in its early days when they just had to cut off the entire world, said okay, let's focus on
it's quite a huge sacrifice.
Yes, it's quite a huge sacrifice,
revenue.
but it is. But I mean, in a situation where your economy is literally tanking, inflation is high, there's a risk of people protesting, energy prices are high. So in one way or the other, you would have to sort out some part of the economy, just to at least reduce prices, and that's exactly what India has done. It's the same approach that Indonesia has taken, and like you rightly said at the beginning, the reason why they did that is to, first of all, because production was low, so they couldn't even, they need to first satisfy local demand before you export. And this is just a very simple case of, comparative advantage when you're looking at trade activities. Now, when you want to engage in international trade, you should have been able to produce enough to satisfy you. So you have surplus, and then you say, oh, okay, I can actually sell this, and your cost of producing this commodity is not as expensive, so you're encouraged to now want to sell, to make money off the excess that you have. But not a situation where you're not producing enough to satisfy your own demand, and then you now want to sell. So it's like you're choosing outside at the expense of your economy, and that has other ripple effects in terms of like a public backlash and all of that. So a lot of times governments, when it comes to international trade, they look at commodities that they have comparative advantage, that is the commodity that they could make the most, and they're not spending as much to produce. And then they already have surplus of this commodity, especially when you look at agri-commodities. And that's exactly what India is trying to do now. They can actually satisfy global demand. But right now, domestic prices are really high. Demand is also high, so they have to satisfy demand. It might be quite aggressive, but right, it's something that is a decision that they had to make in order to cool domestic prices. I remember that it's quite a double whammy when we look at the situation in the wheat space, because China, which is the top exporter, is on lockdown right now, even though some states are beginning to reopen, but production levels are not yet exactly where they used to be, and then selling as well is not exactly where they used to be. The US as well is having some issues with its own supply. US is the 4th largest global exporter of wheat, and then you also look at what's happening in Russia and Ukraine, you know, so that's exactly what's going on, and that's why prices, especially for wheat, will continue to
and we're already seeing, you know, most North African countries actually feel this impact. So countries like Egypt and Nigeria is feeling some of this too. We're seeing the prices of bread actually soar, you know, at this point. But what is the option, you know, for Nigeria, you know, with with this rising price of wheat?
Really, there's very little.
Because I'm hearing talk about cassava here.
There's very little options. I mean, let's start with the fact that before we even go into conversation about cassava, let's start with the fact that the wheat that we import, because we produce wheat, but not the wheat that is used for bread. So that's why we actually have to import, you know, this much. And then with global prices of wheat higher, we're definitely going to see an impact of that in the price of flour. Price of flour is already almost 25,000 naira per bag, 50 kg bag. So we'll see that factor into the cost of production for companies that use flour as a raw material, as an input material. We'll also see that factor into the price of bread. I mean, last year we saw that bakers were already saying they're probably going to shut down operations just because their cost of operations had already increased by almost 20 to 30%. So we would definitely see something like that, and that would fuel inflation. Nigeria spends on an average about like $2 billion on wheat imports alone. So it definitely would have some impact on our import bill, because we're going to be spending a lot more than we're making. Exactly. So, but then when we now look at moving to other options, like other alternatives, preference comes in, like, preference is extremely high here. How many people would want a bread made from cassava than...
I'd like to try it out, though.
Well, that's you. I don't think I would want to try that. But regardless of that, I think that, you know, when we're not in a situation of war or famine, when people still have options, you know, survival instincts don't really kick in. So bringing in a bread made from cassava rather, people might still want to leave it and then go for, they'll rather buy substandard bread than buy a bread made from cassava. So we could see that. But a situation where survival instincts now kick in and then there's really no option, like there is no bread at all, there's no bread made from wheat flour, then we could probably see some level of demand for it. But the question now is, even if we want to do that, do we have the capacity to even, you know, produce as much bread made from cassava that people can actually buy, or that would meet the local demand for that? So there are a lot of questions around it, and like I said, the most important thing here is people's tastes, people's preference. So the bakers would want to make as much money. So instead of going into the production of cassava bread, we definitely would see an increase in the price of bread, and some people that can accommodate the increase would probably do that to just maintain their demand. And for households, like people might change their eating formula. So if you used to eat bread maybe like 2 or 3 times in a week, you probably eat it once. That loaf of bread that used to last for a week or 2 now would have to last for a lot longer. If the bread is looking a bit stale, you put a frying pan on, put the bread on it, you heat it up, or you put it in the fridge.
Quite interesting times, maybe. Well, let's talk about another, this asset class now. Some have grouped it into a commodity, some have said it's digital gold, talking about Bitcoin. So we see the SEC now has, you know, come up with some guidelines on how investors should interact with this asset class. How did the guidelines, what stuck out for you in those guidelines?
I think what really stuck out for me was that, number one, the SEC is doing this at a time when the global price of
the market is in turmoil.
is in the red. It's practically like a bloodbath going on with cryptocurrencies, even stable coins. We're seeing stable coins that should be stable are unstable.
Very unstable.
Very unstable right now. So I think that it's quite I wouldn't say ironic. I would just say the timing just seems a little funny. But regardless of that, cryptocurrencies are known for their high volatility and no regulatory backing. But with the SEC coming out to do this, and remember that the SEC's guidelines are covering the issuance of cryptocurrencies. You're looking at platforms that exchange this commodity and people who hold it. So this is some form of protection, I would say, for people who hold cryptocurrency assets. The exchanges who run cryptocurrencies would now have to be more accountable with their numbers. Will have to be more accountable to the people that trade with them. So everyone would, especially for the exchanges, would have to tread more carefully now that there's a regulator behind what they're doing. And people, because the truth is, unlike a proper legal tender like the Naira or like the US dollar, cryptocurrency still has some lack of trust to it. People don't really understand the dynamics of cryptocurrencies. As much as you hear, oh, it facilitates cross-border transactions, yes, you could easily change dollar to cryptocurrency and then change it back to Naira, yes, but my dad doesn't know my dad knows what Bitcoin is, but he would rather have his US dollar in his account than have a Bitcoin.
And having to,
yes, the woman in the village knows what dollar is, even though she probably hasn't seen it before, but she would rather have a dollar than have a non-existent
and dealing with blockchain addresses.
Exactly, than having to deal with a digital and say, oh, Mama, I sent you Bitcoin. What's that?
What's that?
What's that? She has no idea. So, now that there's a regulator behind it, we could see some level of increase in attention or maybe demand towards crypto assets or digital assets, because now trust could increase. Now that you know that, oh, if I have this money, if anything happens, there is the SEC behind it. But let's not also forget that we're dealing with the Nigerian economy here. The CBN has been very vocal about its skeptic stance. Exactly, about its skeptic stance on cryptocurrencies. So, and that's because they think it's being used, or they are saying that it's being used for illicit, transactions, money laundering, terrorism, and all. So there's still that bubble, or there's still that cloud hovering over the cryptocurrency space in Nigeria. And quite frankly, it's not just in Nigeria. There's so many African countries that are not exactly friendly towards crypto assets. Yes, but with Nigeria doing this, I think that it could put Nigeria in somewhat of a positive light in the digital currency space globally, because this is a very interesting step, and people will definitely want to see how it unfolds. They don't know. No one knows whether the CBN will come and they would consolidate with the SEC, or probably come out and completely, divide itself. So, and we've seen this happen over time. There was a time when it happened with the likes of RiseVest and all that were engaging in US stocks and all. We saw that. But they were backed by the SEC, but the CBN, had a different approach to their transactions, and that had to be, sorted out. So
we need to watch these.
So we just need to watch it. Exactly. We just need to watch
body language.
Exactly. We just need to watch it to see how it all unfolds.
Right. All right, Dumebi Oluwole, analyst, financial derivatives company. It was great having you on the program.
Thank you.
All right, we'll take a moment now. All right, now let's head on to the markets. That we have Ini standing by right there. Ini, it's a pullback we had yesterday.
About time, yes.
Yeah.
About time, laddie.
No market goes up forever.
Yeah, nothing goes up forever. There has to be a balance. But like I asked at the stock markets report yesterday, maybe this is just that opportunity you were looking for.
Yeah, to join this train.
This winning bandwagon, compared to what's going on in other markets in the world at this time. We could say that perhaps this is perhaps a good. But I think.
You know what? We'll continue the conversation in a moment. We'll just take a quick break. When we come back, we'll drill down on the markets. Welcome back. All right, let's get the details from Ini now.
Yeah, thank you so much, Ladi. So there, the equities is down. It's dropped yesterday from that very high height we're flying for about 5 weeks. That was really a good run there, and we don't even know if this has come to say the market was down 0.29%. Equities cap is still within 28 trillion naira, 28.54 trillion naira. Yesterday, the market lost 83 billion naira yesterday, and we saw that there was a 23%, more than 23% increase in the volume of trade. Most likely profit taking is what happened there. The deals was lower the day before. That was on Friday. It was more than 7,000. It dropped to about 6,854 yesterday. Let's look at the sectors now. Mostly major were in the red. Banking was down. The consumer was down about 0.5%, more than 0.5%. They dropped yesterday. We saw a lot of profit taking, and then we saw MTN Nigeria. You know, that big market mover yesterday. It was down yesterday. It dropped, and then insurance. Well, basically doesn't really move the market or have a large influence on the oil share index, but it was in the green. Seplat drove the oil and gas yesterday, 0.60%, more than 0.5% yesterday. So basically the sectors, we see profit taking coming into the market. Top trades, Jais Bank did very well yesterday. I don't know what drew attention to it. Transcore, International Breweries, and of course, on the other side, we had MTN Nigeria. Then we also had the Northern Nigeria Flour Mill. That actually affected consumer goods yesterday. Dropped about how much? I can't remember the figure now. But that's what happened yesterday. I don't know if we have Phil Anigwe now to tell us, perhaps from his perspective, if this has come to stay or this is just a passing phase for the market. Hi, Phil. Good morning.
Yeah, good morning, Nini. Thank you very much for having me.
Great to have you.
I think that the pullback that we saw yesterday was expected. I think for some names, we're beginning to see signs of increased profit taking, and that continued yesterday. You note that the market was on a very strong bull run until recently. Yeah. So some stocks were actually taken to overbought territory. We have some stocks that were trading at relatively high multiples. So in those names, investors took some profit expectedly from those names. You mentioned the likes of some brewers, particularly. They were slightly expensive before now. So profit taking expected. For today, you expect that the sentiments may likely stay the same. But eventually, you find that investors, especially those that missed out on the initial rally, may begin to rotate again into some fundamental names, particularly ahead of June and July when the Q2 numbers will be ready. So those who missed out on the rally should look to take advantage of the current moderation, right? Particularly for companies that are likely to pay interim dividend, like companies like maybe WAPCO, the Totals of this world. So opportunities can open up, right? So that's what we think, essentially. So profit taking likely to subsist, but then eventually people will begin to look out for those names that promise some sort of near-term rewards and strong fundamentals as well.
All right, Phil, thank you so much for that. We'll certainly look and see if that crystal ball of yours has actually seen right by the end of today's trading. Thanks so much, Phil, from Cardinal Stone Securities. So just before I hand over to Ladi, let's see what happened in the fixed income market. In the treasury bonds now, we saw there were only 4 deals yesterday worth 1.33 billion naira, and over there we saw a mixed sentiment there. We saw that the most favored was the April 2032. The treasury bills, just one, very quiet there. And then as opposed to what happened on Friday, we didn't see any activity on the CBN, but we did see 5 yesterday. And then an OMO, yesterday we saw only 3 deals worth 2.31, and the NESD lost yesterday. It was down compared to what happened last week, and the total volume traded was about 61. And there you have it, Ladi. Yeah. Back to you.
All right, Ini. So fingers crossed for today's close. The
yeah,
market.
well, investors will always do what investors will always do what they're expected to do, which is to take profit, so it's nothing new.
Right. All right, Nate, thank you so much. Okay, now let's head on to the UK. We have Juliana standing by right there. It's all about Brexit right now. Great to have you, Juliana. So the trade war with EU draws closer as UK plans to introduce legislation today that would kill off the Northern Ireland Brexit deal. What are you hearing about this?
Good morning, Laddie. Yes, so we are waiting for Liz Truss, the Foreign Secretary, to spell out how the Northern Ireland Protocol will possibly be changed. It's clear that the British government has changed its tone over the past few days. We know that the DUP, which is a very small political party in Northern Ireland, unionists, are really not happy with the protocol. The protocol was putting a border down the Irish Sea to avoid a hard border on the island of Ireland. But unfortunately for them, Sinn Féin, which is now the majority party in local constituencies in that region, they won big at the local elections, and they're pretty happy with the protocol. We know that America, the EU and other Western allies have all joined in on this spat, and they really do not want the British government to tear up that 2019 withdrawal agreement, not only because it will break international law, but potentially it could cause a huge issue on the island of Ireland and break up the Good Friday Agreement. So we are expecting an outline. The Prime Minister, Boris Johnson, says he doesn't want to tear up the protocol now. He hasn't said that previously in the past, but he definitely wants to make some amendments. So we're just going to have to wait and see what the Foreign Secretary does say. But it does appear it could be a lose-lose situation. The DUP, the unionists, are not happy. But also, if there are any changes, then certainly we can expect some sort of retaliatory measures from the EU.
Quite interesting. Well, be watching out for that. But there's pressure on the government to help, those hardest hit by Britain's cost of living crisis. It has intensified. And a leading employers group is saying it's a moral imperative, for the government to actually support there. What's the government saying about this?
Yeah, that's right. Just to announce that we do have some unemployment data that came in this morning from the Office for National Statistics, showing that unemployment fell in the first 3 months of the year from 3.8 to 3.7%, the lowest level since 1978. There are also 1.29 million vacancies in the UK. It is a good time to get a job in Britain. There are so many vacancies. This is the most that there have been on record. In fact, there are more vacancies available than there are people out of work. But we know that wage growth is stagnating, which is a huge issue. And we are expecting further data tomorrow to talk about inflation. That brings me back to your question, because we are expecting tomorrow inflation to reach potentially 9, could be double digits, 10%, which is going to be the highest level in more than 30 years. If you're living in the UK, it feels more than 10%. It feels like 20, 25% when you're going to buy the goods. The CBI, the leading business lobby group representing the vast majority of businesses in the UK, their chief executive says, yes, it is a moral imperative. Why should people who are skipping meals wait to the autumn for the Chancellor to do some help? Help people now. This isn't his money. It's not the government's money. It's the taxpayers' money. Everybody who works in the UK puts money in the coffers for times like this. And he says it has to be done. We are going to just have to wait and see what the government do. There are Prime Minister's questions tomorrow, so I expect a standoff between Johnson and Starmer.
Right. Well, and a lot to unpack there. We'll be watching out for updates, and we'll see you at 1:30. Thank you so much, Juliana. All right, now let's take a look at other markets. Now we see the fear greed index in the crypto market hitting a low that's not been seen for a while. That's about 8 points in extreme fear. Talking about the fear greed index in that market, and we see Bitcoin price started a downside correction from the 31,500 zone, and now it's below it was below the support of 30K. Look at the market cap there, $1.30 trillion. That's up about 1.27%. And we see volume traded $90.44 billion. And look at the top odds market cap is mostly green on that counter, with eCash there topping the counter up about 6.77%. All right, it's all about DeFi. At this point, with most DeFi protocols getting hacked, Let's talk to Sarah Dahosa now, founder, Women in DeFi, to bring us up to speed on what's happening with DeFi right now. Great to have you on the program.
Hi there, good morning.
Yeah, so a recent report shows that decentralized finance industry has lost over $1 billion to hackers in the past couple of months. Yeah. How do you see this development?
Okay, the thing is, the problem with security in DeFi right now, which is it's actually a major problem. And the truth is, most of these issues about hacks, or rather with hacks, is because of us, the users of these decentralized protocols, these DeFi platforms. Now, there are several ways which the hackers actually have access to people, like where they hack into protocols or even people's wallets. Now, I would actually like to speak on three major parts, like three different major ways where these hackers actually have access to people and how they can now hack into their wallet and their phones. Now, the first I'd love to talk about is compromising of private keys. Now, as someone who is into decentralized finance, or you're even into crypto in general, you need to actually have good protection in your wallet, like your wallet where you keep your funds, your DeFi tokens, or your general digital assets. It has to be protected. Now, for decentralized wallets, they have what they call private keys, or should I say 12-word phrase. Now, if your private keys are not secured, if they are not safe, these hackers can actually have access to it. And one major way is by you not keeping it in a protected way, or even putting your own wallet, like putting biometric functions or password or passcodes on your wallet. If your friends or someone close to you actually has access to those private keys, rest assured that they can actually move funds from your wallet to theirs. That's one way. Another way which these hacks actually take place is what we call airdrops. Now, airdrops are ways in which people actually get free crypto assets, like they just send it to people's wallets, or maybe you have to go over a particular activity and then you'll be able to get these free tokens. Now, some people actually, they don't do their own research, like in-depth research to know about these crypto assets that they are receiving before they just go and interact with some websites. Now, there are some websites which their smart contracts, their codes have already been compromised. Like they've written it that, okay, if you actually interact with these websites, that you've granted the hackers access to your wallet for them to hack into your wallet and steal whatever funds you have. So what I always advise is, before you go into any platform, before you actually access any website, you should be sure that, okay, this is trusted. And you can do that by, before clicking on it, try to know about their communities on Telegram, on Twitter, and even Discord. Try to know if these people are actually legit. Because if they are not, they will just take out all your assets, your digital assets. Now, another way which is actually very, very popular right now is the one we call rug pulls, or you could say dust attacks. Yes, rug pulls and dust attacks are actually different. Now, dust attacks is you waking up to see a new digital asset in your wallet. You don't know where it came from, and just because you are seeing that it's worth about, let's say, $300, $400, $500, you want to sell it so you can have funds, but you don't know if this thing is actually real. What you can do is go on the blockchain explorer of that particular asset, copy it and try to see the details about it. If it's possible to check the audit report, you can actually do that, so you can know if it's actually legit or not. Because if you actually go and start...
Yeah, so much to unpack there, Sarah. It's not easy being your own bank. It's not easy playing in this DeFi space with all that's going on with stablecoins. But I want to thank you so much, Sarah, for coming on the program. We will continue this conversation some other time. Thank you so much. That was Sarah Dahosa, founder, Women in DeFi. Thank you so much. All right, now let's take a look at more market details. There we see top 5 gainers there. We see MakerDAO there topping that count is up about 12.52% at $1,675. And we see Kusama also having double-digit gains this morning, up about 11.37%. And top 5 losers, we see the UST stablecoin still going down this point, down 22% at 13 cents. That's supposed to be $1, but it's down a lot from $1 after depegging from the US dollar. All right, that's it on the crypto market, and that's a wrap on the program. Thank you so much for watching. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Goodbye. you.